Excuse me. Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here. Today will be the Wednesday, the 22nd of October 2025. So let's have a quick look at the disclaimer first before we kickstart today's gist of the Daily Dose. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so as usual, let's have a quick recap what has taken shape early today Asia session and as well as the overnight US session price action developments on the intraday movement of all the 12 of all the I was putting with that the intraday movement of the broad-based cross asset classes that we cover on a frequent basis, covering from the FX market, the commodities market, as well as the major stock indices, and as well as any key events and development that has taken shape in the overnight US session as well over here. So let's start with the most significant movement in the broad-based cross asset classes that has taken shape yesterday, which is gold XAU/USD. So why do I want to mention about gold? So we know that gold has been in a very strong bullish uptrend in the last 3 months, ever since the bullish breakout from that 4-month plus of ascending triangle range configuration that has taken shape from April to August this year. So ever since after that early August bullish breakout for the last 2.5 months or so, price action has been very bullish. So yesterday we see a very strong profit taking that has taken shape where gold and silver post its steeper drops in year over here. So this is primarily likely driven to two things they could actually occur. Number one will be position adjustment. So in the last if you look at this rally in gold over here, let me share with you. All right, so this is the movement of gold. So we know that ever since that bullish breakout on the 29th of August, so previously from 22nd of April all the way up to 29th of in August, in what I call it late August. So this is about what 4 months plus of sideways range configuration. So after this sideways range configuration, we see a very steep rally in the last we call it since September all the way up to October. So it's about 2.5 months. We see this very strong rally. So yesterday it did a fall over here of 5.29% over here, 5.29%. So if you look at on the intraday basis, that particular fall, it went to as low as 6.32%. So with this intraday fall of negative 6.32%, so that is the biggest fall in almost what in the last 14 years before paring back losses to actually close at negative 5.29%. All right, over here. So this close of negative 5.29% in spot gold yesterday was the steepest fall on the closing on the daily closing basis since April. So if you go back in time over here, so that was in August 2020, right? August 2020 over here. So in the 11th of August 2020, it has a close of negative 5.7%. So this dramatic fall in a single day on spot gold yesterday is likely driven to profit taking and as well as stop loss level being hit on those leverage longs position over here. And what's interesting over here is that in today's Asia session right now, we start to see a pin bar, right? So in today's Asia session, at the start of the Asia session, the fall actually had a intraday loss of negative 2.9% over here. But after this 2.9% has been hit, it managed to stage a kind of a pin bar or a mini bullish reversal to form this impending bullish daily hammer as we are seeing right now, resting right exactly at the 20-day moving average, which is this line here highlighted in pink. So later I'll share with you the next intraday levels to watch out for and the potential trend bias that could unfold unfold in the next 1 to 2 days. All right, so just bear in mind for what. So this is the action of gold. So the thing about gold over here is it's more this intraday fall of negative 6.3% on the intraday. At the close, it closed at negative 5.3%, negative 5.3% based on the closing price. So this is the steepest fall since 11th of August 2020. So take about 5 years ago. Intraday basis, negative 6.3%. That was way back into that was a 14-year worst fall in the 14 years over here for gold. So this price in gold is more of position adjustment rather than a change in the the bullish fundamental for gold. So why do I say that the longer term macro picture for gold still remains bullish? Because of this chart that I'm watching is the 10-year US Treasury yield. So this 10-year US Treasury yield over here is actually a kind of it has an indirect correlation with gold. Think about it is that gold, we know that it's a non-interest income asset. All right, that means if you buy gold, you hold it for the very long term, it will not give you any dividend, it will not give you any interest income. All right, so if the long-term interest rate trend continues to fall, that means i.e. the opportunity cost of holding gold reduces, which indirectly create more demand for gold, which is continue to actually back this longer term bullish macro picture for gold from a longer term perspective. So this 10-year US Treasury yield continues to fall. Right, it continues to fall since April 2025. So since April 2025, the 10-year US Treasury real yield. So what I do is I just subtract off from the 10-year inflation expectation to give it to strip off the inflationary we call it expectation in the US interest rate, the longer term US interest rate. So take this as this 10-year US Treasury yield is a long term benchmark risk-free rate in the US. All right, so this 10-year real yield, put it as a 10-year real risk-free interest rate in the US. It has been trading in a medium-term downtrend since April 2025, and it's been trading in a major descending downtrend since 23rd of April 2023. And what's interesting over here is that this dotted line, you can see on my screen here, this dotted line on 21st of August 2025, ever since this 10-year US Treasury yield starts to form a bearish Marubozu candlestick and price action starts to trade downwards, it actually gives a bullish pre-signal for the bullish breakout of gold that occur later on the 29th of August 2025. All right, and this also prelude to a key risk event, which is Fed Chair Powell dovish speech at Jackson Hole Symposium. Fed Chair Powell, pardon me, dovish speech at the Jackson Hole Symposium at that point in time. So this dotted green line. So it was actually a bullish pre-signal in terms of price action and in terms of the risk event that has taken shape at that point in time to allow gold to stage that bullish breakout thereafter. So right now, if you look at the daily price action of the US 10-year Treasury yield, is now testing a key support level at 1.66%. So if this price action level breaks down at 1.66%, it could actually lead to a further support on gold price to maintain its major uptrend phase. So still bear in mind that you know that it's now fast approaching the 1.66% level over here. It's about to do that bearish breakdown. So what's interesting for gold over here is that you flip back to the gold chart I share with you guys, it's shaping that bullish reversal right exactly at the 20-day moving average after yesterday's dramatic sell-off that potentially could lead to a potential bullish reversal for gold again if we to take into this macro factor at play, which is the 10, which is this pardon me, the 10-year US Treasury real yield, which is explained to you as a longer term risk-free interest rate in the US. That means, i.e., if longer term risk-free real rates in the US continues to decline, the opportunity cost for holding gold also reduces, and that could create more demand for gold. hence supporting the major uptrend phase for gold, despite yesterday's dramatic sell-off that saw the steepest decline in the 14 years. If you look at the intraday, negative 6.3% for. If you look at on the daily closing basis, down negative 5.3% yesterday for spot gold. So that is the worst decline since 11th of August 2020. All right, so that's for gold. And now with the upcoming uncertainty surrounding this US-China trade tension, so that could also support gold price in the longer term as well. But what we could see over here is that create a bit of mixed bag for the US stock market yesterday. So what I could see over here, and as well as the FX market as well. So yesterday, Trump mentioned in his public, we call it news conference, saying that he see a successful C meeting that may potentially take shape during the sidelines of the APEC summit that is going to be held in South Korea at the end of this month, which is 31st of October. So what he mentions is that US President Trump predicted an upcoming meeting with his Chinese counterpart, President Xi Jinping, which would yield a good deal on the trade. But also Trump, he also tried to play this kind of punk, saying that the possibility remains that the meeting could fail to materialize, saying that maybe it won't happen, giving an example of someone saying, I don't want to meet, it's too nasty. So he's trying to play that kind of brinkmanship and create a bit of volatility to the markets again. So what I could see over here is that yesterday, the US stock market ended very mixed over here. So the SPX ended with almost the unchanged territory after earlier gaining by about 0.3%. The Nasdaq 100 also unchanged, negative 0.06%. The Dow Jones Industrial Average managed to buck the trend, up positive 0.47%, due to the certain mega cap healthcare stocks that has a heavier weightage in the Dow Jones Industrial Average that managed to actually saw the Dow Jones Industrial Average rallying up to 0.47%, and the Russell 2000 down negative 0.49%. And what's interesting over here is that in today's Asia session, the Nasdaq 100 actually underperformed. So the Nasdaq 100 down is now trading down by negative 0.12% over here at the start of the Asia session. All right, so at the start of the Asia session there was an intraday sell-off. So but after that intraday sell-off, once Singapore comes to play at 9 a.m., we see a kind of a mini bullish reversal, this mini V-shaped recovery, allowing the Nasdaq 100 to be have a modestly decline of negative 0.11%. So what causes that earlier sell-off in the Nasdaq 100 E-mini futures was the rather weak result coming out for Netflix. So Netflix has a much more significant weightage in the Nasdaq 100 as compared to the SPX 500 and even in the Dow Jones Industrial Average, which is not part of the Dow Jones, if I'm not wrong. So Netflix report its Q3 earnings at the close of today's US session. So saying that a tax dispute with Brazil cut it into its third quarter earnings that actually saw its quarterly operating income of 3.24 billion, that is about 400 million below its own forecast. All right, so there was actually a 400 million miss below its own forecast and analyst estimate. So that causes the so-called the Netflix stock price to fall as much as 7.5% in the after hours trading session over here. But nevertheless, yes, it created a sell-off on the Nasdaq 100. But if you look at the trend of the Nasdaq 100, which I shared with you guys earlier on in my yesterday's daily dose of market insight, where I covered the full suit, the uptrends phase, the minor uptrend phase still remains intact as price action after shaping that V-shaped rally on last Friday and on this Monday, and able to clear above the rising 20-day moving average over here. So, and also despite that earlier sell-off and the profit taking that takes shape yesterday and in today's Asia session, it still continue to hold above our intermediate support that we highlighted yesterday at 25,030 and we will be using a adjusted short-term pivotal support for today at 24,785, slightly adjusted upwards to 24,740 from yesterday, in line with the rising 20-day moving average. So as long as 24,785 short-term pivotal support holds on the Nasdaq 100, we will have that bullish bias scenario. After the current all-time high area at 25,255 may expose the next intermediate resistance level at 25,370. Yeah, 25,370. So that's for the Nasdaq 100. All right, and as well as the situation on the US stock market. Okay, going to Asia over here. So over in Asia, what we could see over here is very interesting. If I share with you Asia, the Japan 225, after shipping a fresh all-time high yesterday on Monday, riding on the coattails of the newly elected new Japanese Prime Minister that has been officially been appointed after the Japanese Parliament Diet voted her in, Takachi. And what we could see is that we know that market has really likely priced in on Monday that she will have a high chance of being the new Japanese PM because of her new coalition partner. The Japan Innovation Party decided to throw all their votes into her, so allowing her to gain enough seats or enough votes to be officially named as the Japanese PM. So that already been officially made. So Takachi now is already the official prime minister. So we see a bit of profit taking in the Nikkei 225, which is down by 0.48%, and realize that after that earlier sell-off at 9 a.m. Singapore time, we see a minor bullish reversal as well. So still recall that in the Nikkei 225, which I highlighted to you guys to watch out for a pullback, and that pullback indeed take shape. And that pullback, I share with you guys that that pullback also might broke below the intermediate support level at around the 49,300 level. Indeed, it broke through at the start of the Asia session, and what it did over here is that the bullish reversal take shape right exactly at our pivotal support, which we highlighted yesterday at 48,845/48,440. So keeping the bullish bias phase or the minor uptrend phase on the Japan 225/Nikkei 225 as intact as expected earlier in my daily lows yesterday. All right, over here. And the rest of the other Asia stock market continues to be in a consolidation, profit-taking mode. The Hang Seng is down by -1%. The China CSI 300 is down by -0.51%. And you see the Kospi also down by -0.10%. The STI managed to buck the trend at up 0.3%. So very quickly, let's take a look at the Hong Kong 33 over here. So the Hong Kong 33, what we did over here is that we tightened the short-term pivotal support to 25,780 over here. And right now it's trying to test this 25,780 short-term pivotal support. So if we have an hourly close below 25,780 tighten short-term pivotal support on the Hong Kong 33, very likely it may now start to do another messy corrective pullback situation again towards the next near-term support level to watch will be here at 25,470. If this level couldn't hold, it potentially will give way to the critical V-shaped recoveries that has taken shape on last Friday, which is 25,140 over here. So do watch closely these key levels over here. So will it starts to change into a medium-term downtrend? Very unlikely, no, because it still managed to, it got to break below the 25,140 level. So in order for the short-term bearish bias to get negated today, price action got to very fast, quickly break above this intermediate resistance level at 26,060. So these are the updated levels to watch out for the Hong Kong 33. Based on the latest price action that is coming into the play right now as we are speaking, that representing the Hang Seng index over here. All right, so now onward next to the FX market. So the FX market continues to see this kind of sideways range configuration. This is the 5-day rolling performance as of we are speaking right now. And if you look at the 1-day rolling performance taken into the price action of the last 24 hours, we start to see this kind of sideways movement at play as well over here. So bear in mind that if you look at the US dollar index over here, yes, the dollar yesterday managed to shape another rebound on plus 0.38%. Right now, it's also fast approaching again at that upper boundary of this potential ongoing symmetrical triangle range configuration that has been taking shape since 1st of July, and the upper limit has starts to form after that bearish rejection on the 9th of October and 14th of October. So now this medium-term symmetrical triangle range resistance stands at 99.40, and now price action is of the dollar index is trading at 98.92, which is fast approaching this level. And the reason yesterday bounce was also in play with the dollar yen going up above 51 15170 short-term pivotal resistance before whipsawing around that level after that official appointment of that new Japanese Prime Minister Takachi, which is a protege of Abenomics, which is the previous former late Prime Minister Abe, who voiced up for a rather expansionary fiscal policy and as well as a very loose monetary policy. But what's interesting over here is that upon her announcement of the new Japan finance minister, so the Japan finance minister will have a say on the exchange rate as well, on the foreign exchange rate. And this new Japan finance minister, also a first female finance minister as well, Katayama. So Katayama, based on her, okay, give me a minute, I think it's, I want to give it a while. Yeah, you remove all this part. So Katayama is being appointed as a first female finance minister, and based on her previous interview in public media, that was somewhere around in March with Reuters, Katayama said that the yen real value is closer to 120 and 130. So the dollar yen is actually trading now at about the 150 mark. So indicating that it's a bit of excess yen weakness against the dollar over here. And also given the fact that based on her public speeches that was being made to Reuters earlier in March over here. All right. So in an interview with Reuters in March, also Katayama, which is the new finance minister, let me share you guys, saying that the Japan economic fundamentals suggest the yen real value is closer to 120 to 130 per dollar. So what it means that given her past remark, it seems that Katayama favors reversing a weak yen, and markets may have seen this as similar to the view of US Treasury Scott Bessent, which also call for a yen that is to be much more in line with the current Japanese economics slash fundamental over here. So based on the current Japanese fundamentals, how I look at things over here is by looking at this yield spread between the US Treasury and the JGB yield over here. So if you look at the yield spread between the US Treasury and the JGB yield, they are actually calling for a stronger yen. That means, i.e., a weaker dollar yen level, rather than at this level at 151.75 over here. All right. So if you look at the 10-year US Treasury yield minus the 10-year JGB yield, it has already broken down below a key medium-term support of 2.47%. And the shorter 10-year 2-year Treasury yield minus the 2-year JGB yield spread has previously broken down way earlier below its key medium-term support level at 2.9%. So it broke down much earlier on 18th of August before the longer tenure broke down on the 6th of October this month over here. So both of them has really breached below their medium-term key support level. So hereby, from a fundamental perspective, that actually supports a weaker dollar yen as well. Right, so hence in the very short term, there will be a bit of tug and pull between short-term speculators and long-term fundamentals. So if you look at the chart of the dollar yen over here, let me very quickly go to the dollar yen chart. Okay, where's the dollar yen chart over here? Okay, so the dollar yen, if you look at it, yesterday we have a pivotal resistance at 15170. It hit that level yesterday on the intraday basis. Then after that, it tries to trade sideways around here. So given this whipsaw around the 15170 and also the longer term fundamentals that are kind of supporting a weaker dollar yen, so on the intraday basis I will have a neutrality stance today on the dollar yen. So neutral between the next resistance at 15245, which is the minor swing high area of 14th of October, and the lower limit will be the 151 figure level, which now forms into a key near term support level for the yen, the dollar yen, as well as the psychological level 151, previously a minor swing high on 20th of October and 21st of October, where it tested before shaping that push up, the intraday push up on the onset of the parliamentary vote yesterday for the new Japanese PM. All right, so given this kind of whipsaw movement and the longer term fundamental factors that are still supporting a weaker dollar yen, I don't want to be so aggressive to flip into a intraday bullish bias stance for today. So neutral between 15245 and 151 figure level for the dollar yen. All right, so that's covered in the FX market. All right, so I've covered much ground on the first segment of the daily dose. So very quickly, let's move on to the second segment, which I will share with you a chart of the day. So today there will be two chart of the day. Number one for sure will be gold. So let us take a look at the gold intraday chart over here. So like I explained you guys over here is that there's this bullish hammer that's being formed on the daily chart. So let's go through the intraday chart of the gold. All right, over here with the hourly chart. Okay, so let me expand my screen. Okay, so very quickly, let me bring you guys up the hourly chart of gold. So I do mention that yesterday we do have a pivotal support at 4,203, 4,180 break and hit those subsequent support level that we highlighted, 4,056, 4,000. And also this rising 20-day moving average, and where it paused, it also paused at the medium-term ascending channel support, still in play from the low of 22nd of August 2025 low, and after working off from that earlier overbought condition, and this earlier overbought condition has hit a extreme movement, and this extreme movement causes the hourly RSI to dip down to the oversold level, and upon dipping down to the oversold level, there is a bullish divergence that's being formed as well over here. So given this slew of positive, come on, okay, given this slew of positive element which I highlighted, the risk reward ratio doesn't gel to be a bearish bias right now based on the current price action on the intraday basis. So I'll be using this 4,056 / 4,000 pivotal support. So this will be in fact my medium term pivotal support, and have a intraday bullish reversal stance for today on gold XAU / USD. For sure, the first resistance to watch will be 4,203, 4,180. Above 4,203, potentially seek up a further recovery on the intraday towards 4,267. Right, 4,267. Only a bearish breakdown below 4,000 will invalidate today's intraday bullish reversal scenario to see the continuation of that medium-term corrective decline that may flip into a multi-week decline as it continues to mean revert towards the 50-day moving average. So the next near-term support level to watch will be 3,943, followed by 3,895, 3,864, which is this turquoise green line here. So what is the turquoise green line? If you go to the daily time frame, is in fact the former major ascending channel resistance now turns into a pullback support level that was previously in play since 14th of February 2024 over here. So that's for gold XAU / USD. Okay, that will be my chart of the day for a potential bullish reversal right above the medium-term pivotal support zone at 4,056 / 4,000 level. The next chart of the day we are to be highlighting to you guys will be the Nikkei 225 or the Japan 225 with that bullish reversal or that rebound taking shape right exactly at our pivotal support level that we highlighted yesterday, 48,845 / 48,8440. First resistance level to surpass will be this minor swing high area that was formed during the European session yesterday, at 49,560. Above 49,560, potentially seek out a next intermediate resistance level at 50,086, 50,540. Only a bearish breakdown below 48,440 will invalidate today's bullish reversal / bullish recovery scenario on the Japan 225 to see a deeper mean reversion corrective pullback scenario, exposing the next near-term support level at 47,260, which is the minor swing low area of 17th of October, and so coming very close to this rising 20-day moving average as well. So that's for the Japan 225. Another chart of the day to watch out for today. So that sum up the second segment of the daily dose. So let me move on to the last segment of the daily dose, which is what are the key events to look out for today / economic data over here. So today will be the Wednesday. Okay, very quickly, let me go down over here. So Wednesday at the start of the European session, before the start of the European session, pardon me, at 2 p.m. Singapore time, there will be the inflation rate coming out from UK. So market participants will be concerned about the core inflation rate. So core inflation rate, market participants expecting to be rather sticky at 3.7%, slightly above the 3.6% that was printed in the previous month of August over here. So if it comes in within expectation or worse, slightly above expectation, that could actually lend support to the sterling dollar that has been trading down yesterday over here. So that could influence the sterling dollar or the dollar versus the sterling versus the dollar, and as well as the sterling crosses. All right, so that will be at 2 p.m. Singapore time, and going forward at 8:25 p.m. Singapore time, before the start of the US session, we have ECB President Lagarde speaking. And also this week, we will have the weekly EIA crude oil stockpile change. So at 10:30 p.m., so that could influence the West Texas crude oil that is still hovering below our resistance level. So West Texas crude oil continues to be, yes, there's a bounce that's taking shape in today's Asia session after the test of the first support at 56.80. So do take a close watch at the Titan short-term resistance, pivotal resistance at 59.15. A breakout above it will potentially see a mean reversion rebound heading up towards 60.55, which is so confluencing with the downward sloping 20-day moving average as price action continues to trade below the 50-day and the 200-day moving average, indicating that the medium-term downtrend still remains intact for West Texas oil. Now back towards the calendar over here. So after the okay, sorry about that. So I think the internet is very slow. So after the release of 10:30 p.m., the EIA weekly stockpile chain, going forward, next will be a rather quiet US session. So bear in mind that no official release data from the government statistical board yet, except for the core CPI data for US that could be released on Friday. Very interesting. So later we touch more about that as we head towards Friday daily dose over here. All right, and also after the close of today's US session, we will have a mega cap stock release link its earnings, which will be this Tesla over here. So Tesla will release its Q3 earnings after the close of today's US session. So after the close of today's US session, that will be at right after 4 a.m. Singapore time, early Wednesday. So that could potentially impact the Nasdaq 100 price action, and as well as the S&P 500 price action during early Asia session tomorrow. Right, so do keep a close watch on Tesla Q3 earnings result that will be released right after the close of the US session today. That means Singapore time right after 4 a.m. Wednesday, October 22nd. So with that sum up today's Daily Dose of Market Insights. Kelvin here. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.